welcome back. Today we're going to be talking about power of 3, accumulation, manipulation, distribution, CRT, open, high, low, close, whatever you guys want to call it, alright? Which is the frame, or I guess the schematic of accumulation, right? So price accumulating, right? Lack of displacement, we get the manipulation, always with time, right? Those are your best manipulation. And then you get your distribution. Okay, so accumulation, beautiful. Then you get the fake move down, the Judo swing, right? The fake move where a lot of people are now looking at this as a break of structure, change of character, or even, a breaker block or a mitigation block, or even a fair value gap right here, right? Whatever, because they lack the higher time frame understanding. So we get the manipulation, and then we get the distribution. This equals no time, right? Accumulation, there is no time. Manipulation, there is time, or we have time with the distribution. If the manipulation did not occur with time, we expect the distribution to occur with time. All right? That's all you guys need to know for time in this aspect. Obviously, I have gate kept some information for my students as a respect towards them. All right? However, we shall continue, and I shall educate you guys. Again, this is not financial advice. This is just how I view the market, and you guys can potentially learn a thing or two with this, right? With my understanding. Again, not financial advice. Let's continue. The easiest thing to understand accumulation, manipulation, distribution is using our fair value gaps and using our higher time frame drawn liquidity and our higher time frame order flow. If you guys have watched the previous video, we understood that this low would be taken out. Why is this low very attractive? Well, this low is very attractive because this is the 4 months fair value gap. Beautiful. 4 months fair value gap right there. And now if we go to the weekly, if we go to the daily, etc., now we understand that this low is very attractive, right? Once our weekly, daily, monthly fair value gaps fail to displace price above, then we understand that price should most likely target this low down. Yeah. All right, makes sense? 4 months fair value gap, beautiful drawn liquidity. All right, write down your notes. Now, as you guys have your daily fair value gaps, okay, no longer displacing and creating new fair value gaps, then we understand price can be retracing or reversing, right? We also understand this is a monthly idea. So if you haven't watched the last week's video, I do recommend watching that too. And now we have daily bearish fair value gaps that are displacing price to the downside. Very nice, okay? Now, as we're getting our daily fair value gaps, right, this itself is a model. This itself is accumulation, manipulation, distribution. But what we are going to talk about is how we can synchronize this with all time frames. Okay. As this fair value gap gets tapped multiple times, I talk about it with my students why we do get that multiple taps, all right, and how you guys can avoid losses here. Potentially, you guys are looking for entries, and you guys are taking shorts, and you guys get swept, and now you guys hate trading, and you guys crash out, whatever. Instead of doing all that, let's just jump down in the 4 hour and let's skip the noise, right? We understand that price can come for a sweep here using the higher time frame profile, right? We understand this can be swept. Our fair value gaps aren't displacing price below us, okay? And we aren't disrespecting the fair value gap right here. So this is all you just playing defense, right? You guys just play defense here. If we are going to be displacing price below, and if this fair value gap actually holds and creates new bearish fair value gaps, then this bullish fair value gap gets disrespected, and then we actually make the eye here. All right. If we don't do that, then we understand there is a bit of resistance this 4 hour fair value gap. With this 4 hour fair value gap, we have resistance. Therefore, this 4 hour fair value gap doesn't know what to do, right? And if this fair value gap fails to displace and create new fair value gaps, then we understand that this high can get swept. As this high gets swept, then we understand that this high being swept is just another re-mitigation of the daily fair value gap. Okay, so far, hopefully it's making sense, right? We're still just using fair value gaps. We aren't talking about manipulation, distribution, etc. We're just talking about fair value gaps, just creating some context, all right? But this itself, if you guys have the narrative, accumulation, you have the manipulation, the fake move up, where potentially people are buying these fair value gaps without understanding the higher time frame context, and then you guys are getting wrecked or seeing this as a break of structure, and then you guys are trying to buy this demand zone, or whatever demand zone you guys see in the low time frame. Okay, rubbish. But with us, we understand, right, with context, this high can be swept. And as this high gets swept, what are we waiting for on this time frame? A 4-hour bearish fair value gap. As we get this 4-hour bearish fair value gap, we actually have no more resistance, right? We understand that this fair value gap here, the most recent leg, has been disrespected. This 4-hour fair value gap has been disrespected. We're also pro-trend. We're looking for shorts on the higher time frame. We're looking for bearish order flow. Why? Because we have a higher time frame draw on liquidity. Beautiful. So now what we can do is we'll do the same thing on this fair value gap. All right? How fun. Now, if we go to, let's say, the 5-minute for entry, what do we know here? Okay, we understand, let me make this a bit more like that. We understand here that this is all accumulation. If I get rid of this, and then I post this on TikTok or Twitter, and I say, all right, this high is going to be taken out, and then price is going to go bearish. Now, I look like a god, right? How does Nate know this high is going to be swept? How does he know this where price is going to reverse? Blah, blah, blah. All right, but all I know is this high equals the 4-hour fair value gap, right? Look how cheeky the analysis is. And look how cheeky, or cheekily, if that's a word, people actually get, trapped into, trying to find the enigma and all that. 4-hour fair value gap, that's all you need to know. Now, we know this is all accumulation. Until the 4-hour fair value gap gets tapped, this is all fluff structure. All right? Once the 4-hour fair value gap gets tapped, what are we looking for? The same thing, right? Exactly what we spoke about. And I'll even show you guys some bad entries and some good entries to show you guys it's still legit. All right? So we understand this is the 4-hour fair value gap. We are in the 5-minute, and we understand that this right here, okay, right here is the 5-minute resistance, right? 5-minute fair value gap. If price is breaking structure or going bullish and disrespecting the 4-hour, then this 5-minute should hold. If it doesn't, then we understand that price is bearish. As we fail to displace price above, you guys can have a normal entry just like this. Again, you're having almost 100 pip stop loss, right? Ludicrous. But does it matter? It does not matter, because our draw on liquidity is all the way down here. So now this becomes a swing position, right? A 12-hour swing position. Maybe you guys partial, maybe you guys manage it properly, whatever, okay? That's your swing position already running, okay? As you guys have this trade running, right, you guys already are reducing your FOMO, right? There's no fear of missing out because you guys already have a swing opportunity, and if price is bullish, it's going to take out this high. But this is the manipulation, right? As we spoke about earlier. Accumulation, beautiful. You get the manipulation, potentially with news, okay? And then you get the distribution right here. Beautiful. Or they're down here, okay? Doesn't really matter. Now we understand accumulation, manipulation, distribution. News, in this context, equals manipulation, volatility. News, time equals volatility, all right? Good. We'll get rid of this. Now, if you guys want to scalp the same move, maybe 100 pip stop loss isn't your trading idea or how you guys trade, and you guys don't want to be in trade for many weeks. I don't know why. It's legit free bread. But let's say we want to look for our entry or our lower time frame entry. Okay. If you guys already have this position right here, right, what you guys can do is wait for time again, right? I do talk about time with my students. So again, I am gatekeeping some aspects for my students. But let's say we're now looking for bearish order flow, right? We have time involved now. Bearish fair value gap right here, another one right here. Okay, these can be beautiful entries. Entry just like this, and your stop loss can be above this swing high right here. What can you target? You can target this low down here. I do talk about news highs and news lows, right? Very in depth with my students too, right? But this low will most likely be taken out, right? You realize this when you guys study enough price action. Some lows are almost guaranteed to be taken out, and your entries doesn't really matter. All right, it's always a high time frame. But let's say you guys, using this fair value gap as context to see if price is actually bearish, perfectly fine, right? Then you guys can take the second fair value gap right here, and have your stop loss above there, and you're still making 4R right there. So now, if you guys have a swing opportunity that's here, that's running, you guys will also get a scalp opportunity present. Beautiful. Okay. Now, what occurs here is you get another bearish fair value gap. Okay, and you guys can put your stop loss above here. Now you have another 82 pip stop loss. Okay, so you guys have potential another swing opportunity right here. Right, very, very straightforward. You know what I mean? Because we've already done the higher time frame analysis. We already know that this low is very attractive. All right. So now, if you guys have a swing up, you guys have two swing opportunities. Okay, and this one's running 12R, and this one's running, let's say, 15R. Right? It just comes naturally, right? Just manage it appropriately. Cool. But let's say you guys have this right here, stop loss above the swing high. Cool. And now you guys target this. Obviously, right? I'm not promising you guys you're gonna get, this ludicrous R's. If you guys watch my videos, I say, manage it appropriately. Take partial at 3-4R, 2-3-4R, doesn't really matter, right? Partial at areas of resistance, cool, all right? But as you guys have these running, right, potentially you guys only have like, let's say 10% running or 15%, whatever it may be, or even 1%. As it runs, these amount of RRs, it just compounds, if that makes sense, right? If you have a 0.2% risk and then it's running, let's say like 60R, right? It's plenty. That's all you got to know. It's plenty. Now, let's talk about it. Let's go to the 1 hour, right? Cool. The trade ran, cool, right? As we are now getting our bullish order flow as we reach the 4 months fair value gap, right? You guys can, sure, if you guys want, you guys can try catching the bottom here. Cool. Doesn't really matter. Doesn't really concern me. It's not impressive, right? What's impressive is you guys consistently making something out of the market, right? Now, as we continue the bullish expansion, the same thing is going to occur in the higher time frame, right? As we expand higher. So what we do want to be looking for is the same thing, fair value gap mitigation. Okay, so fair value gap right there, beautiful mitigation. Another one right here. And as I said at the start, right, CRT, open article close, everything is the same. We're just utilizing fair value gaps in this context. CRT, cool. Right, you guys can believe it's CRT, you guys can believe it's fair value gap. Doesn't really matter as long as you guys are making some sort of progress. You guys are understanding how price moves. That's very important. So now, why is price going bullish? Okay, there's a monthly fair value gap right here. Beautiful monthly fair value gap. From that 4 months fair value gap to take out this high right here, as our fair value gaps, our resistance fail to resist price, and we just blast through it. Now let's go on the 4 hour. Okay, beautiful. Now, the same thing is going to occur as we expand, right? We have a 4 hour fair value gap. Let's confirm this 4 hour fair value gap with a 1 hour, right? And we're going to apply the same thing. Let's go with power of 3 in this context, right? A 4 hour fair value gap makes a 1 hour fair value gap, and this 1 hour fair value gap is overlapping with, what's this? You guys can call a mitigation block, you guys can call a breaker block, doesn't really matter, right? Breaker block, right? Took out the swing high, took out the swing low, mitigated PD ray, blast through, close above, cool. Now let's confirm this in the 5 minute, right? How is this going to look like in the 5 minute, right? Let's go here. Or let's even use the 1 minute, right? Because we're using 1 hour, 1 minute is perfectly fine. So now if we get rid of all this, right, we'll just use the breaker block in this example. We understand this whole leg is all accumulation, right? This is the 1 hour fair value gap right here. So we understand this equals manipulation, right? Or accumulation, manipulation, all right? And what are we waiting for is, even when we tap the 1 hour fair value gap, we aren't making bullish fair value gaps. We're still resisting. We're still mitigating the 1 minute fair value gaps and actually displacing price below. But now, as you guys meet the overlapping, you're getting your bullish fair value gaps. And what you guys can wait for, as we waited for previously, is waiting for the second fair value gap. This one right here. Right? That could be your potential entry. Stop loss below the swing low. What are you going to target? The swing high right here. 4.6 up. Maybe this isn't convincing enough, so you guys take the second or the third fair value gap right here. Again, same thing. Right? You're still banking a 3R. Right? Perfectly fine. Right? Beautiful, beautiful expansion. Right? And when the trades do run, it's going to run. Right? So don't stress about that because we're using the higher time frame. Right? So again, accumulation. So you get the manipulation right here, and now you're getting the distribution. And this is all time sensitive, right? These are all occurring within time. That's what you guys need to know, right? Beautiful. So hopefully that made sense. Very, very straightforward, right? Which is just utilizing the high time frame FVG gaps, utilizing time, etc., and just utilizing the lower time frame FVG gaps as entries. Beautiful. Thank you.